Hello, everybody. It is Toni Turner, and welcome to the Market Now on Friday, November 22nd at about 3:30 p.m. Eastern. Well, global stocks are moving higher today, while U.S. yields are heading south. That's a good thing. In the meantime, Bitcoin is trading near its $100,000 threshold, and gold is heading for one of its largest weekly gains in over a year. Finally, in the good news area, the U.S. dollar remains strong. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today, when I captured this chart, as you can see, the SPY was trading at $594.60, or about $59.46 on the S&P 500 itself. Now, it is trading just below. See, this all-time closing high was right here. That was on November 11th, and that came in at $598.76. So we see now that the SPY is sitting above the red line, its 20-day moving average. The 20-day is coming in right now at $587.14. Also above the green line, its 50-day moving average coming in right now at $579.33. Now, we know that ever since September, the SPY has been really adept at staying above this 20-day moving average, at just walking up this 20-day moving average. And this chart only goes back to May of 2024. But for the most part, the SPY has been walking up the 20-day moving average, and that's since last October. So that's a year and change. It's done so since the October low you can't see on this chart, the October low a little over a year ago of 2023. The low back then, you can't see it again on this chart, was $409. Since then, the SPY has traveled to this all-time high that, again, at $598.76. That's a 46% gain. Now, of course, nothing goes straight up or down in the stock market. And if we look back at the July highs back here, the market was still humming along above its 20-day moving average for the most part. It has, of course, since a year ago dipped several times. But mainly, it's been walking up that 20-day moving average. In this case, it moved up to its July highs at that time on the SPY was 565, humming along there. Then it rolled over and took quite the dive down to the August lows, opening here at 500, and on August 5th, opening at $511.64. So that was a rude awakening, that whole tumble there. But then it moved up in a V formation, went right back up to those prior August highs, to the prior July highs, and in August it walked sideways at about 565. For quite some time. Then in early September, rolled over here, dipped down below the 20 and 50 day, quickly down to 539 and change, then rallied back up and then broke out above the August highs and jumped up in September and October, moved back down to the 20 day. Up again in September and October, broke out again, then rolled down to the 50-day moving average, and then managed to gap up here. That was on the day after Election Day, gapped up, came up to that all-time high, and then moved back down into where we are now, again at 594.60. So if we want to, we can draw a trend line under these lows. If I can do this because these lines don't draw very straight. But anyway, we can draw a trend line like that, and we can see that it's going to line up pretty closely to the 50-day moving average. So when you get price and you get trend line and you get a moving average all coming in close to one place here, you know that that does give it some potential being the leading word here. It does give it some potential, more strength, I'll call it, because of that. So 579, 580 could have some good strength coming in here, potential support at any rate. So we have that. We have, of course, again, these highs up here will be right around 600 is going to be the resistance. Nearby support remains at the 20-day moving average at 587 and change. We have the again the 50-day moving average at 579. We have the October low at 568. It comes in. Of course, the September low is down here at 539. And we have the 200-day moving average coming in at 542. So right here, potential strength if we need it. Hopefully, we don't need to go down that low. Please know that the market likes to move higher ahead of a holiday. Of course, next week's going to be a short trading week. The market is still bullish, but we have gone a long ways here in the last year. And I am just kind of keeping my eyes on things, definitely pulling up my protective stops. We could get a breather here at some point, so I do want you to watch your protective stops. It's all good news, but let's watch our protective stops. Okay, our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows the Nasdaq 100, which is composed of the top 100 non-financial stocks in the Nasdaq stock market, including large momentum stocks like Nvidia, Meta, Apple, Tesla, Alphabet, that whole group. Now, when I captured this chart today, the cubes, as we sometimes call them, was trading at $505.26, just below its all-time closing high on November 8th, that little green candle right there, if you can see it. It recorded all-time closing highs right there at $514.14. Now, like the SPY, the cubes is walking up its 20-day moving average, always though at a more volatile pace, always much more dramatic than the SPY because tech stocks are much more dramatic than some of our consumer staples and so forth that are in the SPY. So this is always more dramatic than the SPY. You can make more money. Sometimes you can lose more money. But anyway, let's keep an eye. It's very important here. So we see again that it's hanging on to the 20-day moving average, which is coming in right below price today at $501.79. The 50-day moving average, the green line's coming in at $493.06. The 200-day moving average down here is coming in at $464.39. Now, if we quickly look back at the July highs, they were back here at 503. As I've said before, yes, it walked up the 20-day moving average, but look at how steep that angle is. That angle, it just, experience has taught me that price cannot sustain an angle like that for certainly not forever. Something's got to give and traders take profits. So at that point at 503 back in July, then the Qs did a dumpster dive down to their August low and open. The August 5th open there was at $424.71. Then it managed to rebound back up through the moving averages for 3 weeks, back through the moving averages, made an August high here at 486, then rolled over to 448, stayed above the 200-day moving average this time, then rallied back above the moving averages to a September high here at 494, then back to the 20-day moving average, finally moved back up in October to 501. Just look how it was walking along that 20-day moving average. You can tell it's getting a little tired here as it's trading at less of a premium to that 20-day line than it was, say, back in June and July. So you can tell that its legs are getting a little tired here. However, it finally dropped down in October down to let's say 501, then back down, and then rose up on November 8th at rallied up to an all-time closing high up here on November 8th at $514, as we said before, and 14 cents. So this was the election rally right here. That was the election rally. So we have now potential price resistance here at 515, 516. Again, we have potential support right underneath at the 20-day at 501, we'll call it 502. And the 50-day at down here at 493. I always like price to stay above the 50-day moving average if possible. One can hope, I guess. It's not a strategy, but we can keep our fingers crossed. October low comes in here at 483. We have the 200-day moving in here, coming in here again at 464. So if we draw a trend line here, and many times we like to draw a trend line coming in above the initial low. So, and anyway, it works out here. So if I can do that, I'm drawing it too steeply here. It's hard to do with this particular instrument. If I can do that, we see it coming up here pretty much like the SPY did, along with its 50-day moving average. So that just tells us that there's probably a little bit more potential support here at 493. Again, we know that November, January, and February are usually the most positive months in the year. And we have to remember that overall the market has risen dramatically in the past year. So, and do remember that, and I've said this 100 times in the last 20-some years, the markets of industrialized nations move in cycles. They do not move up forever, and please God, they don't move down forever. So markets move in cycles, okay? Maybe higher lows and higher highs and uptrends. That's kind of what we've had and kind of what we want. But please know that at some point things happen and profit taking comes in. So you just want to be wise, and as traders, keep your stops in place, and at this point, maybe trade what you see, not what you think will happen. Our final chart today is a daily chart of the iShares U.S. Oil Equipment and Services ETF. We haven't looked at this area in a long time. I'm just kind of seeing life come into it it's been a while for sure. We're looking at the IEZ here. It has 29 holdings. Top holdings are Schlumberger, Baker Hughes, Halliburton, Champion X, and Weatherford International. Now, when I captured this chart today, right here, the IEZ was trading at $22.06. We know, looking back here, that it had recent highs back here, and you may say, gee, this doesn't seem like the broad market. Well, oil and oil equipment and so forth does not trade at all in the same pattern as, say, the SPY or the Nasdaq, so it is going to look different, and that's actually one reason I chose it. So when recent highs back here were in April at $24.85. Then we know the IEZ fell down pretty hard here, down to June lows down here at $20.63. Then it rallied from there up to July highs here and here up to 24. Then it came down to price likes to go where it's been. And we can see that the June lows were here, and then you can see that it jumped up pretty dramatically, then fell back down to retest these June lows. Now we're in August, came back down to $20.70, then tried to rally, tried to get above the 50-day and 200-day, but couldn't do it, and then fell down here to these September lows at $18.63. Then it moved back up to the 50-day moving average, came back down, and that was September lows, and it came back down to a higher low here and a higher low here at 1930. So those were pretty close to even. So the low part of 19 then rallied up dramatically here in November. And this, of course, you can maybe tell by looking at it, that was an election move right there. So it rallied up. This is the election rally, back down, up over the 200-day, couldn't hold, came back down in, and then came up to where we are again today at 2206, now above the rising 20-day, 50-day, and today above the 200-day moving average, which is coming in at $21.69. Don't know that it'll be able to stay here throughout the coming week, but anyway, it's something I'm definitely going to keep an eye on. Also here, it looks like we could have kind of a double. It's not a triple bottom because it didn't come all the way down, but this is a bullish pattern, at least in the short term. And then when it comes back up, look how the 200-day, if it's a double bottom, look how or kind of like that, look how the 200-day moving average is forming this line over it, and we broke out today over that resistance line. So I'm interested to see with this double bottom pattern, if the handle, we call it a handle, can keep forming on this, what could be a double bottom here for sure. I want to see how this continues to form. We want it to go sideways a little bit and then break out, so that's what we want. And again, right now we're at $22.06. So in the coming week, if the IEZ can stay above its 50-day moving average, which is coming in at $20.60, I will buy a small position of the IEZ, again, small position in my trading portfolio, with my initial stop is going to be a little low here at $20.50. If you want to raise yours higher, certainly go ahead. If and when the IEZ can rise above, up here, it's $24. Whoop. If it can rise above $24, I will add to my position and my stop will be a trailing stop. So you may want to keep an eye on the IEZ in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. The Trade to Trend, one of my favorites here is Trade to Trend, Trade the Trend to Profits right here. Trade the Trend to Profits. It shows you how to enter, manage, and take maximum gains from long-term trades, one of my favorite things to do. In this training, you will discover how to spend less time researching and monitoring your open trades while also learning how to take bigger profits out of the market. This course teaches you how to buy low and sell high. I love it. And do it successfully and do it for now on. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts. Those are the charts I use right here. Or Metastock real-time charts for free. From our ever-popular 7 Steps to Successful Trading, how to swing trades successfully, the one we're talking about, Trade the Trend to Profits, how to read charts for novices, 3 winning setups for short-term traders, bottom fish like a pro. Love that. And there's more. Find out how these timeless online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen or simply click on the orange button below. Now, from all of us at ToniTurner.com to you and your loved ones, we wish you a very happy Thanksgiving. Keep green on your screen. I'm Toni Turner, and this is The Market Now.